Hello, winners, and welcome for Two for the Win with your hosts, Nick and Wil. We've talked a lot about entrepreneurship, finding a side hustle. One of the things Nick and I have had quite a bit of success with is real estate. So if you want to learn more about investing in real estate, please stay tuned. But before we jump into it, please be sure to subscribe, share, and follow Two for the Win on your favorite platform. Check us out on YouTube, and also want to give a shout out to nickmenard.com and the 1% Push, as well as his Amazon best-selling book, Mindset is My Degree. Thank you, Nick Menard.
You're very welcome. Hello, winners. How are we doing this week?
Let's go. So we were thinking about, hey, let's get back on the entrepreneurship track. We thought, well, why not talk about real estate, right? It's obviously the most tried and true way over the history of humanity to gain wealth has been owning land or real estate. And so we're going to chat a little bit about that. But any high level thoughts you want to start with our winners about investing in real estate?
Well, my recommendation is, when you start seeing any kind of small success, do something with your earnings. Like, regardless, but do something with it. The worst is to keep the money in the bank.
Mm-hmm.
So do something. And that's something I did in US because I came and I didn't have a lot of money at all. After 4 years, I was completely broke.
Mm-hmm.
And what I did, and you need some luck, but luck is earned.
Mm-hmm.
So I just started investing in little thing, like I could not invest in real estate in the beginning, but I invest in little thing, it can be stock, it can be bonds, it can be something, like, and then I start getting some return, and then I start getting better and better return. Was lucky a couple of instances, and then I start investing back in real estate, which directly paid off because of situation that happened, like COVID, for example,
Mm-hmm.
for me. But you never know what can happen, and then I was able to turn that in my favor. But you have a great history of also owning a lot of real estate in different states as well, so that's pretty good topic to talk if people think about what should I do, because there are a lot of preconceived notion of, oh, I need X amount of money in order to start investing in real estate, but it's probably not the truth.
Yep. No, that is very true. So let's jump into our favorite segment, quotes and quips. So one of this person we're going to read the quote from has a great series of books I've personally really enjoyed, and that's Robert Kiyosaki. So the one that made him very famous and was a best-selling book was Rich Dad, Poor Dad. But his second book is probably the book that really helped broaden my mindset. We talked about broadening horizons last week. So, and that was Cash Flow Quadrant. And, are you an employee, entrepreneur, a business owner, and an investor? So this first quote is from Robert Kiyosaki. And he says, real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. Thoughts on that?
You need to start somewhere.
Mhm.
And so again, you don't need to invest in per state building first, You can invest little thing, maybe some fix and upper, or you can invest in, a little villa or a connecting house or something, or like if you are lucky enough in a parking, like a parking garage. I mean, I know years ago, back in Europe, 15 years, 20 years ago, man, that was cheap as hell. And you make an instant return with very little to no maintenance.
Mm-hmm.
It's literally a garage.
Right.
And in Europe, you had even under the building those garage. Same here, but with no door. So you literally never have to have maintenance ever. And literally people pay you every week, and it's getting more and more expensive because there's less and less room for people to park.
Mm-hmm.
So it's probably harder now to find space like that, but look close to airport, like people buy some land very cheap, like 2 miles from an airport, and then now those lots are packed all the time because people use a shuttle to go. There are a lot of options, but that's real estate. Real estate is not only a house, a villa, or a building of 10 stories.
Oh yeah, no, you're absolutely right. And I think a fun fact, a lot of people probably already know this, but maybe some don't. One of the ways that McDonald's made an immense amount of wealth was they owned all those
Mhm.
properties. So when you franchise, they bought the property and then you lease back the space to the McDonald's Corporation,
So
and they were the
smart.
largest
Real
owner of
estate.
real estate in the world. So definitely it helps. And I think, the first step for people, just buy your own home. A lot of people rent, and there's advantages to rent. You don't have to worry about maintenance. You can get up and go a lot easier in certain circumstances once your lease is done, things like that. But, I first started in real estate when I was 21. Um, Bought a condo. My dad was always in my ear about real estate, real estate, real estate. And so that was my very first property, and it was in Wisconsin. It was I think at the time I paid 84,000 for it. And um it was, I don't know, it was a second level condo. But long and short of it is I ended up moving 2 years later to Vegas. I sold that and actually made money off it.
Okay.
So, I had a positive investment right off the start, something like that. Um, but anyway, yeah, Nick's absolutely right. Just get started. There's a lot of different ways you can get started in real estate, owning your own home, buying an investment property, buying a property like you're mentioning, like investing in parking garage, like all that's real estate. It's just the difference between residential and
Mhm.
commercial. It's just the type of classification you want to get into. All right. The next one is a quip. I just like this one. So it's actual cartoon. Like, oh, it's a Blizzard. Okay, it's a Blizzard cartoon for those who are familiar with that. But it shows two females uh, walking into an office, and the one female says to the other, "How was your date last night?" And she says, "He's a charming fixer upper. I may flip him."
So you're gonna ask me what I think first
Of
about.
course. Yeah. What does that mean when she's flipping her date as similar
Oh,
to real estate, Nick?
yeah. So basically, you can buy something who needs a lot of work, and you have two choices: or you fix it and keep it, or
Yeah.
you fix it and sell it.
Yeah.
So it seems like this lady find her fixer upper, but she's gonna probably enjoy it for a little bit and then flip it.
Let someone else deal with the headache. Yeah, good for
So I mean, again,
her.
I never did that because for those who don't know me, I have two left hands and I'm very very lazy when it comes to any kind of handiwork.
Hmm.
So I'm not gonna be bothered fixing anything. I just call someone. But if I
Hmm.
call someone, unless it's a close friend, but then they're not gonna build, like fix a house for me. But
Yeah.
if I have little needs left and right, I usually have friends who a friend who will come do it. But for this, if I need to, you know, to use a company to fix the roof or use another company to do the demo and to do that, then it costs a lot of money. And
Hmm.
usually people who make a lot of money in those flip is because they are manual and they can actually do most of the work themselves. So they
Hmm.
save tons of money because that's not something that they need workforce for. So
Yeah.
I personally never did it, but I know so many people who made fortune thanks to flipper uppers.
Yeah.
If you like watching TV and
Oh, yeah.
you see a lot of those flipper upper
HGTV. I used to watch
HGTV.
that a ton.
Me too, me
Yeah.
too. Like,
Yeah.
and but you have experience with that, so maybe you can
Yeah.
say more about it.
Yeah, so I haven't done commercial real estate. That's something I've been exploring, like multi-unit apartment complex or
Mm.
something, but I haven't pulled the trigger on that yet. Most of my real estate, well, all my real estate investing has been residential. Most have been single family homes, although I have done duplexes as well. I think it depends on your appetite, because to your point, if you're handy, you can do some of the work. I'm like you. I'm not really good with that. I'm good about figuring out what's the market, what's the price they're asking for, ballparking repairs, and just seeing if the ROI is worth it. Um, but yeah, but it helps if you can do the, to your point, of to save. The thing that I found to be a big uh, decision is I've I've enjoyed flipping more because it's in a lot of ways clean and easy. Like I'll give an example. One of the last flips I did was a place in the Cape, and this is, oh gosh, probably 2010, 2012, something in that range. Anyway, it was a foreclosure, and foreclosures are great when you can get a good one. Sometimes the bidding process gets a little weird, but anyway, found this property. It actually fell out of escrow with somebody else, and they're like, you have to be able to close on it within, I think they said like 25 days or something. And I'm like, fine, we're all done. Anyway, it was a single family home right near a elementary school in the Cape, near downtown Cape. And I picked it up. So I actually got a little creative with the offer at the time, just because I don't know, I just like playing around with offers. So the property was going for 79, and I paid 81 with them giving me a little credit back on the costs, just so I had to come up with less money. And they accepted it. And so, but this thing was a dump. I mean, it took out walls to make it open, kitchen concept, the master bathroom. Where was that? Where was that small bathroom we stayed at the hotel that had like extremely small bathrooms where you were like filled up the whole shower door? That's how big the whole bathroom was in that place.
No.
It was nuts. So it tore out walls. Anyway, long and short of it is, it needed a lot of work. Put like 60 into it, and then sold it for just under 300
Wow.
within in a matter of a year. So that's not like a traditional flip. I've done flips where we flip them
3 months.
yeah, 3 months and stuff like that. It's all in your definition of flip, but because it took a while to fix up that property, that's why I call it a flip. We didn't rent it. I've done rental properties where I get frustrated with the rental properties. In full disclosure, sometimes the renters are real knuckleheads, and the property management companies, I haven't had the best of luck with those. I've been better managing it myself. But I will say the thing where I've probably cost myself a fair amount of money, and this is something that again, not giving advice, just sharing my perspective and from my experience, is the thing about real estate. The best thing about real estate, in my opinion, is leverage. You can get a multi-$100,000 asset for literally a few $1,000s down, depending on how you structure the deal, depending on the loan you get and stuff. So, like, for example, let's just say I did 100% financing and I put 10 grand down, 5 grand down for closing costs or whatever. But the beauty of real estate is, like, if you try to get $350,000 in stock, you need $350,000, right? Real estate you can leverage, and the cool thing about real estate is if you have enough equity, you can borrow against it. And so I have a property now that I rent, and it was the same thing. You need a lot of work, fix it up, but good renting, cash flow. That's a key thing with renting. Do not take negative rent. You at worst case, you got to break even, and you got to assume vacancy and stuff like that. But the reason why I'm leaning more towards the renting longer term, I think flipping is good when you get started because you can get quick cash. But like, if I think about if I kept a lot of the properties I eventually sold over time, the renter is basically paying down my mortgage over time.
Mm-hmm.
And I would have had not only equity, but I could borrow against that equity and leverage. And I think that's one of the things when we're thinking about entrepreneurship, it's like, how do you acquire assets that you can borrow against so it can fund additional endeavors? And when you see people who really create that generational wealth, they're really smart about working the system. And my guess is, this is a guess, I don't have any scientific proof, but I would imagine if you went across and you looked at the portfolio of a lot of self-made millionaires,
Mm-hmm.
majority of them have real estate as part of their
100%.
the asset and stuff like that. But I'll pause there because I know I rambled a little bit. But different ways to do it, and it's just a matter of what's your appetite and trying to maximize the ROI from it.
I love it. And again, there are so many ways to work on real estate. Like you mentioned, something that I'm also thinking, and I know someone personally in the Dallas area who is very involved with this, and we may have him on the guest at some point to talk about his commercial real estate. He's buying minimum 5-6 stories building, and he's renting like all the different units. And he started in Dallas, I believe. But again, not saying too much because he may be a guest at some point. But I know he has in North Carolina. I know he has everywhere. And he started with a partner because it was a larger amount of money. And then now he has a 3 or 4 or 5 partner. And so they build like something that it's always gonna be income coming in from all those cash flow. Is a cash flow. And so, but you need to realize when you do those things, you will have also negative situation where you need to fix something.
Sure.
And of course, that's where when you can borrow on the equity you have, that's what they do. So they never really use their own money. They always use the money from the equity of the building to be able to use this, and then they pay off those costs with the rent. So basically, yeah, if you are having like a strong contract, if you build the contract the right way in real estate, you really don't have to have a lot of money to do so. You just need to make sure that you have a plan, like everything in life, but definitely in real estate, you have a plan. Are you going to keep it for 90 days and then do XYZ cost in there to sell it, flip it? Or are you going to have a renter within 45 days inside in there? And the exit strategy, how long are you willing to keep this property? And it's not like you have a crystal ball, you can see the future, but if you have a plan to follow, you can follow this plan. And if you need to tweak at some point, you have the ability to do so. But sometimes I see people just buying real estate because their parents or because they hear on TikTok that it's important to own real estate, but they don't have a plan.
Right.
So they just don't know what to do. And that's where you start getting nervous because you have to pay XYZ, and then you maybe not have a renter or a bad renter, which it happens, unfortunately. And so something to think about on that is definitely the to have a clear plan of action when you buying real estate. What is the reason why you never like went through the real estate, like commercial real estate and those lot that you mentioned?
Oh, with commercial, it wasn't in my wheelhouse. Like I think I shared in the podcast before, one of my first like quote unquote real jobs when I was like 21, I think it was I became a loan officer for a bank. And so I was doing refinances and purchase lending for the bank for their customers. And so I was just more familiar with it. I knew the lending guidelines because there was a lot of different lending programs. It's kind of like the travel business where you have all these vendors and they have different things and there's nuanced things between the different vendors. Same thing for the lending business. There's all these different programs and criteria, and I was just more familiar with it. I think again, like most things in life, I think your appetite for risk is a factor, right? Like if I could pick up a $200,000-$300,000 single family property, all right, at the end of the day, there's not a ton of risk because again, it's not like I'm paying cash for those most often. But I think when you're talking about commercial, you're talking about multi-million-dollar, or even if it's an 8-unit property, depending on the location, that's probably like 800,000 or whatever. So it's just more risk. There's different lending criteria, different rates. And then again, I didn't have the best experience early renting. So I was always a little more sour. I like the flip. But I realized looking back, while the flipping was lucrative, I cost myself money if I would have held on to those properties. Because at one point I had 10 properties in 3 different states when I lived in Las Vegas. I was in Nevada, Arizona, and New Mexico, and didn't have the greatest property managers, and so a lot of factors go into it. But I can say with full sincerity and confidence, like I've done quite well with real estate. So even areas where I didn't do well with certain properties and things like that, the good ones far outweigh the bad ones by far. And it's one of the things. I have my oldest son went in on the latest property, right, so that he could learn a little bit about what it means to size up a property, how to negotiate the deal, how to find economical ways to improve it, and things like that. So it's definitely, I would say, a family business now. Yeah.
That's awesome. No, I love those stories because it open people's mind about what's possible. And you touch point about something in the beginning that we didn't really follow up on this, and it's own something instead of renting.
Yes.
And I know I still hear to this day some people I prefer to rent. And yes, I know why. We are in Florida. There are hurricanes coming up. They're afraid to buy and to have like their house wiped out. So I get that part. But don't buy in a place that is the highest probability to get your house wiped out. I mean, we never know. Nature, Mother Nature, we never know. But we kind of know where you will be good to go and where you're not. But and then people get stuck also. I hear, well, I don't know if I'm going to stay here long term. Well, good, because real estate, you don't have to stay forever when you buy it.
Right.
So you can buy real estate in the intention to live in and stay there. But if you have a great opportunity to live, in 2 years to, I don't know, Texas, well, great. You assess the situation of the market. If it's the right time to sell, you put it in the market. Doesn't mean you need to sell it. You just to see a little bit the return, or people are seeing the value of your house. If you don't get what you need, what you want, well, you can always start by renting in Texas and see how it goes, and then assess or take a second, like mortgage, or sell the first one and buy another one. And like I said, assess the market. It's always like up and down, up and down. It's like the stock market. Never sell when it's low, when it's going down.
Right.
And so you just assess. If it's not the right timing, hold it, and then you can rent. And then at some point you will be able to get money back and plus, and then reinvest somewhere else and rebuy your house. But yes, when you own something, I feel like I put my money into something that it's mine, instead of putting my money in like flushing through the toilet and then leave to the. I can understand sometimes if you are in the latter part of your life. If, for example, you're retired, you want to experience life by traveling all the time, and you don't particularly want to own a property. You have assets, other asset or something like that. I get it. That sometimes like renting may be good, but when you are starting your life or have a family and you build a family, literally that's something to have. And Rich Dad, Poor Dad from Robert Kiyosaki. I couldn't pronounce his name anymore. Kiyosaki. Yeah. Definitely read that book.
Oh yeah.
Because that will help you understand difference between asset and liability. Because when you own a house, it's a liability because you need to push money in there, but you can turn it into something that can become an asset. So very, very good book to read. But I think that it gives people maybe a better view of what's possible. And for those who are investing a million property, hope you enjoy and you kind of agree with what we said. If not, or if you want to add something, please don't hesitate to reach out and add something to what we're talking about. And happy to have you as a guest if you are a serial real estate buyer and flipper. We would love to talk to you as well, because I think that it's something that everybody would like to understand a little bit better.
Yeah, and I'll give a quick tip. If any of our listeners are going through financial difficulty, and you don't have a lot of money in the bank, not even to really put pay the closing costs on a deal, what I would recommend you do is find a real estate opportunity It doesn't matter what kind of property. But, study the market, have a good idea of what it is, and negotiate a price. When you sign the contract, and you put your name in for the line, add these words, and / or assigns. What that allows you to do is, let's say, Nick, I find a property you have. I want to buy it. I got no money. We negotiate me to buy a property like you normally would, and I add or assigns after it. What that entitles you to do is now I can flip just the paper to another investor who can close, and they pay a finder's fee. Typically it's $3,000 to $5,000. So if I was really down on my luck, one of the things I would do is figure out some properties, negotiate with the seller, and be able to put and or assigns after my name, find a real estate investor and say, hey, I have this deal right off the bat. There's some instant equity, blah, 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 blah. Would you be interested in me assigning the contract to you for $3,000, $5,000? Yes. Great. I get the money. I don't have to come any money to the bank. I literally did not put a dime into it. I put my time into it, but not a dime. And you can make $3,000 to $5,000. So it's just a quick tip. There's a lot of creative ways that you can get involved in real estate. That doesn't require a lot of money. It just requires to think outside the box and learn about different ways that work within the law that are legal, and figure out ways to do that.
That's a great tip. I love it. I heard about it. I never did it.
I did it once. One time I did it. I just wanted to do it.
You did it.
yeah. Just say I did it, and it worked. It worked fine.
Here we go.
Yeah.
Awesome.
Yeah. So, but you have to hustle. Like those deals aren't just sitting around there. Otherwise everyone would be gobbling them up. So you gotta hustle like anything in life. But hope you enjoyed it. And to Nick's comment earlier, like you want to talk more about this, send us a note, and we're happy to do more episodes. There's a lot we didn't cover, but could. But you'll have to wait till next time, winners. So that'll wrap up today's Monday Mindset. Thanks for listening. Please be sure to subscribe, share, and follow 2 for the Win on your favorite platform, including checking out YouTube. And thanks again to nickmenard.com and the 1% Push and his Amazon bestseller, Mindset is My Degree. And that'll wrap it up for now. Take care, winners.
Bye, winners.